Imagine a world where one of the most recognizable brands in the beverage industry is struggling to stay afloat. This is the harsh reality that PepsiCo is currently facing, with years of double-digit price increases and shifting consumer preferences taking a significant toll on the company's sales. But here's where it gets interesting. Activist investor Elliott Investment Management has just taken a $4 billion stake in PepsiCo, and they believe that with the right strategy, the company can be turned around. According to Elliott, the key to revitalizing PepsiCo lies in addressing the lack of strategic clarity, decelerating growth, and eroding profitability in its North American food and beverage businesses. But what does this mean for the future of the company? And how will they achieve this ambitious turnaround? To understand the scope of the challenge, let's take a step back and look at the factors that have contributed to PepsiCo's current struggles. The company has faced significant headwinds in recent years, including stubborn inflation, which has led to a decline in consumer spending on discretionary items. In February, PepsiCo reported that years of double-digit price increases had weakened demand for its drinks and snacks. In an effort to combat this, the company has been expanding its distribution of value brands like Chester's and Santitas. However, despite these efforts, PepsiCo lowered its full-year earnings expectations in April, citing increased costs from tariffs and a pullback in consumer spending. The company reaffirmed this guidance 3 months later, and its tariff costs have continued to rise. In June, the Trump administration hiked the tariff on imported aluminum from 25% to 50%, further exacerbating the issue. So, what's the plan to turn things around? Elliott believes that with a clear and ambitious strategy, PepsiCo can unlock significant shareholder value. The firm wants to work with PepsiCo's board and management to improve performance, drive innovation, and become more efficient. But here's the part that's sure to spark some debate. Elliott's goals are not just about cutting costs and increasing profits, but also about helping the company to sharpen its focus and unlock the value of its leading brands, unmatched scale, and world-class employees. And this is the part that most people miss. The fact that PepsiCo's international business is actually growing, and that with the right mindset, the company can leverage this momentum to drive growth and innovation. As Elliott so aptly put it, the path back to winning is clear and achievable. But what do you think? Do you agree that PepsiCo can be turned around? Or do you think that the company's struggles are too deeply ingrained? Share your thoughts in the comments below. In the meantime, PepsiCo will review Elliott's recommendations, and the company has stated that it maintains an active and productive dialogue with its shareholders and values constructive input on delivering long-term shareholder value. As the situation unfolds, one thing is certain: the future of PepsiCo is about to get a whole lot more interesting. With Elliott's investment, the company has a rare opportunity to revitalize its business and unlock significant shareholder value. But it won't be easy, and it will require a fundamental shift in the company's strategy and mindset. As we watch this story unfold, we can't help but wonder what's next for PepsiCo, and will the company be able to rise to the challenge and reclaim its position as a leader in the beverage industry?